It's a simple truth about the stock market. If people are already talking about a stock, then the easy money has already been made. The best gains usually happen while stock is still cheap and still flying under the radar. Gladly, I'm here to help you unearth some real hidden gems today. After some serious digging, I discovered 4 great stocks. Each are fast-growing companies that almost no one has heard of. Each is trading under $20 per share, and each is showing signs of big upside potential ahead. If you like the sound of that, then please do me a favor and hit that like button. It tells YouTube to put more videos like this in front of you in the future. Now, all right, let's get to that first stock, which is Seanergy Maritime with a symbol of SHIP, right? Ship. This is a shipping company that hauls dry bulk, iron ore, coal, basically the big raw materials that move the entire global economy. By the way, in case we haven't met, I'm Steve Reitmeister, but everyone calls me Righty. I'm a partner at WallStreetZen.com, where our quant rating system identifies stocks with the highest potential to outperform the market. And I know you already know this, but investing carries inherent risk, so always do your own due diligence before buying or selling any stocks. Now, let's get back to Seanergy and why it's so interesting right now. Shipping is all about supply and demand. When there's more cargo to move around than there are vessels to carry it, shippers get to name their own price, and that drops almost straight to the bottom line. Seanergy has been riding high on exactly that profitable setup, and it shows up loud and clear in their recent earnings report. Most recently, they beat expectations by more than 50%. In fact, this is not an odd occurrence. This is their 19th consecutive quarterly earnings beat. Gladly, there are signs the good times being here for quite a while, as the company is forecast to grow earnings by roughly 40% a year going forward. That is 3 times faster than the average company, and this growth helps fuel a hearty 6% dividend yield. The most important part is analyzing prospects for Seanergy through the lens of our Zen Ratings quant model. Gladly, it earns a coveted A rating, which amounts to a strong buy recommendation. Note that the other 3 stocks featured today are also in this elite A-rated category. A quick note about our quant ratings model: we look at 115 different fundamental factors for each stock and then boil it down to an intuitive letter grade of A through F. A's are in the top 5% of all stocks from this analysis, which leads to a nearly 3-to-1 outperformance over the S&P 500. So it pays to get A grades, right? You can also dig deeper with the component grades, which divide those 115 factors into 7 key areas of review. Let's take a look at how Seanergy stacks up under the Zen Ratings microscope. Its AI factor grade is in the top 9% of all stocks. And I should explain that isn't measuring how much AI the company is involved with. Rather, it's our proprietary usage of advanced AI algorithms that detect subtle patterns in market data. This factor anticipates future trends that often point to superior stock price results. Or in simplest terms, it's a great timeliness indicator. All right, moving on, we find that momentum for Seanergy is in the top 7% of all stocks tracked. Even better is the top 5% showing for growth. This is the best component grade to foreshadow more earnings beats ahead. Value is a touch better in the top 4%. Note this is based upon a review of 21 different value factors. Now, the best part is sentiment in the top 1% of all stocks. This shows that the smart money is already warming up nicely to these shares. Now, where it gets dinged up a notch is with our safety grade, which comes in as a lowly D. That's the honest trade-off here. Shipping is a boom and bust business, and thus the shares swing hard when freight rates move even the slightest amount. So this is not the sleep easy pick of the video today. But when you appreciate the long-term supply-demand dynamics in favor of higher rates, and their sparkling fundamental review from the Zen Ratings, and that fat 6% dividend yield, and a share price still under 20, well, there's a lot to like in these shares and a strong start to our video today. Before I move on to our next stock, a quick aside: if you like discovering under-the-radar opportunities like these, then I strongly suggest you sign up for my next live training session this coming Monday. The focus is on timely market insights plus my top picks. Now, it's totally free, but you do need to sign up. Do that now to join me this coming Monday at 7 p.m. Eastern Time. Just go to wallstreetzen.com/live. Now we're going to move on to our second stock today in Amtech Systems with a symbol of ASYS. Now, everybody wants a piece of the AI chip boom, but the biggest risk is playing those chip makers directly, as can be seen by the ongoing price volatility. Now, a great way to enjoy the upside without as much of the harsh downside is by focusing on the key suppliers to chip makers. Amtech perfectly fits that bill. They make the specialized equipment that goes into building and packaging the advanced semiconductors that power all this AI hardware. Now, the business is pointing in the right direction on the numbers that matter the most for a growth stock. That's because Amtech's earnings are forecast to grow by 80% a year going forward, about 5 times the pace of the average stock these days. So serious growth. Here's another bit of good news. Shares got caught up in the recent AI tech sell-off, so we are not chasing this stock near the highs. Instead, we are being offered a very juicy buy-the-dip opportunity. So how does our quant model grade these shares? Well, calling it an A rating seems too low, given they stand in the top 1% of all stocks after that full 115 fundamental factor review. Perhaps saying A+ is a bit more accurate. And then as we look at the component grades, the bullish story continues to hold up. For the financial strength component grade, it ranks the top 13% of all stocks. This points them being a top-notch operation. Better yet, growth is in the top 4%. And then for sentiment, it's even higher in the top 2%. So you've got a fast grower that the smart money is already starting to notice. Now, here's a detail I truly like. Out of more than 30 companies in the entire semiconductor equipment industry, Amtech is the #1 ranked according to our model, even higher than more popular names like Kulicke & Soffa or Integris. So this tiny 230 million market cap company that few have heard of is actually topping its entire industry. That's a pretty strong sign the market is asleep at the wheel on this special growth stock. This is a good moment to remind you that Zen Ratings are updated daily, so be sure to visit the quote pages on WallStreetZen.com to see the latest rating for this or any other stock. It's totally free, so be sure to bookmark the site for your many future visits. And before I move on to the next 2 stocks, you should take this important step, and that is to hit the subscribe button and notification bell. That's because I publish videos featuring timely stock picks several times per week, and these actions are the best way to ensure you don't miss my future releases. Our next stop is Betterware de Mexico with the symbol of BWMX, but I'm going to call it Betterware for short. Here we have a direct-to-consumer company straight out of Mexico. They sell home organization products, kitchen goods, and beauty products through a huge network of independent sales reps. Think of it as a modern-day take on Tupperware's sales model, which is expanding greatly into Latin America. That Tupperware example is even more accurate when I tell you that they actually bought Tupperware's entire Latin American operation in the past year. This gives them a massive expansion opportunity beyond the previous focus on just the Mexican market. This is a big part of why I added it to my Zen Investor Newsletter portfolio, where I feature my top 20 stocks for the long haul. Remember, we are focused on stocks flying under the radar, so it's not going to be a surprise when I tell you that there is only one Wall Street analyst currently covering the shares. Gladly, that analyst is Eric Beater of Small Cap Consumer Research. He ranks in the top 14% of all Wall Street analysts, over 5,200 analysts covered, based upon his stellar stock picking track record. Now, he recommends the stock as a strong buy with a price target that points to nearly 80% upside in the coming year. The Zen Ratings provides one of the best ways to fully analyze the prospects for an under-the-radar stock like this one. Gladly, Betterware truly hits it out of the park, scoring the top 1% of all stocks for stellar fundamental profile. Again, this is A+ territory. The component grades reveal twin strengths in some key areas you should know about. For both financials and growth, it lands in the top 4% of all stocks. These are the 2 most important grades that greatly increase the odds of more earnings beats ahead, which typically points to more share price outperformance. The risk is the same as most foreign stocks given fluctuations in the local economies and what that might mean for their currencies. But this stock has enjoyed tremendous growth in the past and set to unlock even more growth as they expand into the Latin American market. Sprinkle in the top ranked analysts supporting the stock pounding on the table for 80% more gains in the year ahead, plus the top 1% showing in the Zen Ratings review. And here's a great bonus. How about a 7% dividend yield cherry on top of this tasty stock? Not a bad way to go for our third under-the-radar stock. Before we get to that last stock, one quick thing. If you want to stay one step ahead of the market, then join me live every Monday at 7 p.m. Eastern Time. That is when I share my updated market outlook and trading plan to outperform. This is also when I unveil my trade of the week based on our proven Zen Ratings quant model and my greater than 40 years of investing experience. It's a free event, but you do need to register. Just go to WallStreetZen.com/live or click the link in the description below or scan the QR code on the screen above. Just pause the video for a moment to sign up. I'll be patient and wait for you, and then I look forward to seeing you on Monday. On to that last stock, and it's one with significant upside potential according to some Wall Street analysts. Yeah, here we have a company sitting on a backlog worth billions of dollars, playing in one of the hottest corners of the entire economy right now. I'm talking about Orion Group Holdings, with the symbol of ORN. Let me back it up a notch and tell you exactly what they do. Orion is a construction company that specializes in big, complex stuff on or near the water, like marine terminals, docks, and bridges. Yet increasingly, they have pivoted to pouring the concrete foundations and site work for AI data centers. And yes, my friends, that is where the growth story really starts to take off. All that AI computing power that everybody is racing to build has to physically live somewhere. Somebody has to prepare the site, pour the concrete, and build the structure that houses it. That kind of work is more and more in Orion's camp, and the demand for it is exploding right alongside the AI boom. The proof of this high demand is on proud display given the 60% earnings growth expected for Orion this coming year. This is not the typical slow growth you would expect from a construction company. This stock has a bit more Wall Street analyst support with 1 buy and 3 strong buy recommendations. Even better is the array of much higher fair value price targets that point to up to 100% upside potential in the year ahead. And remember, analyst recommendations are updated daily, so be sure to add any stock you're interested in to your free watch list on WallStreetZen.com. This is the best way to be able to come back frequently to see any fresh upgrades on your stocks. Now, let's turn our attention to the data analysis of the Zen Ratings, where just like the other stocks, today we have an overall elite rating of A. The component grades reveal a lot to like too, starting with sentiment being in the top 14% of all stocks. Again, that's the smart money indicator. Safety is even better in the top 12%. Not that common to have growth and safety together. And yes, we already talked about growth. Growth jumps all the way up to the top 4% of all stocks tracked. Note that this grade is more about the consistency of growth, which is the best way to foreshadow more earnings growth and more quarterly earnings beats ahead. And here's a big bonus. Just like our second stock, Amtech Systems, these shares are down well off their recent highs as investors are taking profits on all the AI-related stocks. This doesn't change the 60% growth expectations. We just get to tap into that growth at a much more attractive entry price. And don't forget that 100% upside predicted by one of the Wall Street analysts. There you have it. 4 exciting growth stocks, all flying under the radar, all trading under $20 per share, and all with massive upside potential. Now, remember, prices move fast, and these are smaller names that can move faster than most. So if any of these caught your eye, then don't sit on your hands for too long. This is also a good spot to remind you the Zen Ratings and analyst coverage are updated every day on our quote pages on WallStreetZen.com. Do yourself a favor and bookmark the site now to properly research any stock before adding it to your portfolio. Now, I want to hear from you. Which of these 4 stocks are your favorite? And is there any other quality stock under 20 you think I missed? Drop it all in the comment section below for the benefit of our community. A good way to follow up this video today is coming on your screen next. That is where I share some of the most undervalued stocks our system is flagging right now. Go check it out now.